5:30. Thanks for everyone who's joining us on Father's Day. Happy Father's Day, as I like to say to all who participate. Saw a couple of funny memes and things like that. And fathers get it done, whatever it takes, including doing chart talk at 5:30 when there's barbecues to go to before too long. So we'll keep this tight. But as always, I think there's some important things here, and let's get to it. Everything looks bullish. Very healthy. We were, I don't want to say stressing, but look, watching closely as this potential top formed. We busted down, flushed through that level. The 50-day held really well, and as soon as we recaptured support, we ripped back to the highs, and we spent last week kind of chopping sideways. Much easier to see on the short-term chart. We had this little flush, and this is it's a little different because we had the futures roll and it doesn't line up, but this is now a pretty clear support level. There is one up here that coincides with the bottom of this high volume area. But I'm much more focused, and you'll see on NQ, the support that's forming up higher. You could make a case that it's now going to be 74.15, I think, because I think it was just about 65 handles was the premium going from June to September. So yeah, overall, it looks very good. NQ, same thing. And I mentioned this last week. I'm not a huge moving average guy. They certainly are useful. But when something's working, just pay attention. And you'll see a number of charts that came in, tested the 50-day, and bounced higher. NQ, you can see we've got a much cleaner level up here. And I'm not a moving average guy, but I am I'm not going to say a strict volume profile guy. I frequently call this the histogram. But I do pay attention to volume at price. And this is pretty clear. And you can see the test we had here last week. Came, tested it, and then a sharp bounce higher. This at, I don't have the number right here in front of me, and the way my charts are set up, it's over this display, which is not my live charts, it's the report that I put out, is over my charts, so I can't just jump right to it and tell you the exact number, but it's pretty easy to see. RTY, small caps are doing pretty well. This is a changing character. Again, see the 50-day, but we're just hanging out right at the highs. We're not busting higher. NQ seems to have problems doing this. New high, hang out for a while. New high, hang out for a while. New high, hang out for a while. Where I think a lot of people would like to see, some real follow through. No idea if we'll get that or not. This is very interesting. I have been not bearish, but expecting this to resolve lower. This, I do not consider this a breakout by any stretch of the imagination. We closed essentially right at the level and poked higher. You can see that we do this, and what we really need to see is acceptance. Sorry, believe it or not, I still have this cough. This may resolve higher. They liked Kevin Warsh's comments. You can see this pushed up and went, and this did start right on Wednesday, essentially right while he was speaking. The hawkish pause, I've heard it described as, and the dot plots and some of the things saying like we could have as many as 2 interest rate increases by the end of the year. Again, stay tuned. I do think that they want to let it run hot, meaning they'll let inflation run a little bit high before they aggressively raise rates. There's been a lot of body language to that effect, but we do have the new Fed chair. So your guess is every bit as good as mine as to how this will play out. But this is very interesting. It could be a great shorting opportunity and entry and could follow through lower, but I rarely do that unless I get a false breakout and a failure down lower and starts to follow through lower. But this is a tricky one to trade anyway, but absolutely worth monitoring. But my takeaway and how I describe the bonds is muted reactions. The range compared to this has been muted ever since the Trump administration took over. And I think that's still the case. If we break any of these significant levels, I'll be the first to call it out. But right now, it's pretty small movement. This is the 30 minute. Again, I'll highlight this. So this is 2 o'clock to 2:30 on Wednesday. And we did get, within a smaller range, a notable reaction that came out. They sold bonds off. It immediately rallied back up, almost right where it started. Now it's almost back down to the lows, chop. And I don't think anyone knows really what to make of it. And there just hasn't been real follow through in any direction yet. I continue to watch these levels. So 110 flat is the increasingly important level. If we go through that, some things will change, and we could resolve a little bit lower and still be comfortable there. But let's continue to watch. Monitor. This looks okay for now. Same thing. We're just going sideways in a small range. There's not too much to make of it. As long as rates remain under control, we're okay for equities. Overall view, bullish, clear support levels, and this is simply a consolidation near the high. Boop, 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 dude. Going sideways and chopping through there. Again, I'll have a 50-day. I feel like I'm doing this. I did this last week. This is the Qs. Same thing, got the flush, like nice look, wants to go higher. Wow, their semis look great. They've got to take a breather at some point, but good Lord, I guess they did take a breather from October to about April. So I don't go into that, but they're driving the Qs. Tech is driving the Qs. Everyone knows this. I do have a couple of charts I'll get to right now. I want to give credit where credit's due. This is top-down charts. They do good work. They're available on Twitter. And, I want to, if I'm using somebody's work, I want to, at least acknowledge who did the work. This is activity in leveraged ETFs. When retail basically surges in and starts to buy, and this is not that long ago, 22, but it was much more associated with a high, not dramatic, but people were chasing momentum and doing some things like that. And, people, professional traders or aspiring professional traders love to say, oh, retail's coming in. It's time to, we've sold all our stock to them and it's time to let them carry the bag. That's really changed in the last couple of years. And here's some pretty clear evidence of it. Retail is getting a lot smarter. There's a huge surge, right? And this, I guess, is the April low of last year. And there's another surge just kind of, the dip a week or so ago, a couple of weeks ago. And this is going up. So retail and money, people using leveraged ETFs are getting very active, coming in and starting to buy the dips. Very interesting to note. I don't know if there's a specific takeaway that you can make about market action, but it's certainly worth noting. Switching to this, again, top-down charts, different takeaway. I talked about breadth and rotation and some of the things that make me feel that the market is really healthy. This is a chart that compares the Mag 7 versus everything else. And what we're seeing now is, and for some time now, a month, that the Mag 7 has really kind of been underperforming the other 493 stocks, and they're surging higher. This is rotation out of the very few stocks that dragged us higher for a long time. And it goes back much longer than just this very short-term chart. But I view this as healthy, and money is just rotating into other names, not other opportunities, and we've seen some real catch-up in smaller stocks. Margin debt, and I think it's smart and thought about it just for a minute, controlling for money supply. That's why margin debt over M2, the entire economy, the entire money supply is larger. It's just sort of controlling the denominator. Basically this says we do have a lot of margin debt. We do have a lot of people in leveraged ETFs. There is, and I want to be careful with my phrasing here, fuel for the downside, but I don't take this as any kind of a timing signal. I'm not going to look at this like, oh, here, we've got to roll over tomorrow. Do not look at it that way. The perfect example here is, March of 2000, yeah, we pulled back a little bit, and then we went sideways till September of 2000. I don't know anybody who we're talking to here who can ride something out for 6 months. Similarly, June, July of 07, then into October of 07, then things rolled over. March of 2026 to May of 2026, right there, that little sign, and we've been hanging out there that whole time. So to step back, when something happens, and if is the bigger word than when, there's fuel. There's a lot of leverage in the market. People are levered long using levered ETFs. And if for some reason we started to go down, there's reason to believe that will continue. But don't take this as a timing cycle. I really want to emphasize that. So, and this is why, Russell 1000 value, again, I like to chop up the market into different categories and look at it. This looks fine. I was going to make a joke about the meme of the dog in a room on fire, like this is fine, but that misses the point because this is fine. So I don't want to make fun of it. Russell 1000 growth, yet again with the 50-day. It really looks to matter. It looks to be mattering across that, and I simply think that some algos have found that and they're following it. It's nothing more than that. This looks very intact. You can see this high volume area, which is a little bit of resistance here. Now it's some support, and this is a level we can watch before we have anything going on. Now to show the other side. And highlight here, the last few weeks, the comment here has simply been, I've been looking at this and like, this is not what you want to see. And it's China, and the US can go up for years with China having problems, but we do want to highlight both sides of the coin. Consolidation here, and then this week we followed through lower, and it looks like this coincided with Warsh comments and the strength of the dollar. I don't think that's a coincidence. Again, I don't trade this, so I don't know what to make of it. But I am going to highlight it and point it out. This is, I'm not going to call it the weakest stock across the globe, but of the ex-US markets that I follow, this one does stand out a lot. And it's not a lot of ex-US stocks, markets. Many of them look great. This is a little nod to the Wizard of Oz, semis in South Korea and Taiwan, oh my. But we're just ripping back higher. As I said, semis look absolutely fantastic. This looks great. EEM, I put it on here originally about following emerging markets. Not the best picture, not the best correlation to emerging markets, but I think important to show nonetheless. Breath looks great. This is, the fact that it's not doing much and it's just we're rotating into other names. This all looks good. Very happy to see this, and it's. I love having nothing to say about this chart. That's a good thing. I love this. This is the 1 week performance, in pictures. And again, wow, look at semis. These are, 14%, 6.5%, 10%, 14%. Texan, which is, sleepy old one, up almost 10%. Qualcomm, I don't know if that's a semi exactly. Semi equipment names. These stand out like bright green across the board. Okay, I'm not sure what's going on with healthcare. I had a lot going on this week, and I didn't see some things, but somebody sees something they don't like. And then, okay, we're going to talk about oil in a minute. Energy was weak. But overall, again, the rotation, a lot of these sectors look very good, very happy. No complaints here. Okay. This green line has been here since well before I started doing these presentations with Mr. Top Step. It's a level that I've seen, and if I could drag the chart out, you would see where it coincides with some data points farther over here to the left. It is absolutely a level, and it worked here, and lo and behold, it's working here. And I'm not sure how severe people are, how we're going to open after some, shooting, I guess, over the weekend. Reemergence of hostilities, 3 days after the ceasefire was signed, and we'll see how it responds, but we'll see how oil responds. This is interesting. If you're looking to get long, this is a decent setup in that you have a pretty defined low, just a couple bucks here. But I've tried a couple of times. It's really hard to trade oil right now, just because the ranges are massive. You get in a day like this, and you buy it here on a break or something like that, and then next thing you know, you're down $3-4. And even with one contract, you start to feel that. So I have not been trading oil very much. I have had my toe in the water a couple of times, but it's just, and I am thinking about getting long here, but we'll see how it opens. We'll see what's going on. That would be my stop right there. If we make another new low, I'm out. Brent, again, so you can see we're slightly below this spike low here. But found a bid and look okay. Brent is the better play, in my opinion, because it's seaborne and not WTI, which comes out of Oklahoma. And this is an ETF, so don't pay too much attention to the actual level of these numbers. But if the supply chain is as bad as I've heard, and rumors are starting to change about that, this could be a good entry. Again, if you're looking to do it. I haven't decided if I am or not. Natural gas, changing character, nothing new to say here. It looks healthy. And one of the rumors I'm talking about, I wish I knew who mentioned it to me, said the Qatar facility that was bombed could be back in as early as 2 years. That's still a long time. They were talking like 7 or 8 years, but 2 years, so that's a big difference. And the rate of change and the direction of the news is notable, but this is telling me that there's still something going on with natural gas. I think there's probably going to be an opportunity here sometime, but it could be September. I don't know. Well, we'll just watch and let the charts tell us what to do. Gold, I'm far from a gold bug. I would reject any characterization of that, but I am bullish on gold since about last year when we had this very sexy breakout in September. Pushed way up. I got out way too early, something like here, and missed a hell of a move. And now we're chopping around. This still looks like consolidation at the highs. If we got down to about, again, I'll highlight the profile down to about here. I'd probably do a little value buy, not a trade. I'm not sure how this resolves. I don't like going things under the 50, under the 150 with all this. This looks like a downtrend, but okay, we got a little too overcooked to the downside, bounced back to resistance. Now we're rolling over again, and the dollar's pushing higher. This is resilient in the face of a dollar that is pushing a little bit higher. So again, longer term, I think there's going to be some opportunity here. I do think this is fairly seasonal, and I'm not in a rush to buy it, but it's on my radar screen. Bitcoin, not much to say here. That's an ugly topping looking formation, but for some reasons, the cost to produce Bitcoin, I'd be a little surprised if we flushed a lot lower unless something really changes. What I highlight is how much the range is contracted. This is just much smaller range than we've had over the last several years. Okay, here, 30-minute charts, and this, we had a rough week with oil coming back and everything got hit. Longer term charts still look good. Are these buys here? I don't know. I'm just posting the question, and I'll spend some time thinking about it the next day or two, taking a look. Technology, this is, again, I keep talking about semis. This is a high, going out at a high on Friday, and these look great. This is about China. This is overall tech, and it's, pretty close to recent highs. I don't think it got too much higher off the left part of this chart. And then IGV, which is the software ETF that keeps getting beaten up because AI is going to replace all software. These will be value buys at some point, but there's a lot of air that can be taken out of these tires. I'm in no rush to buy this one either. Key sectors, as I mentioned just a minute ago, I'm not sure what happened to healthcare this week. This is easily the worst chart of any of these on a longer term basis. Consumers okay, industrials look great, and financials look pretty good. Healthcare is just, it can't get out of its own way, and I'm really not sure why. Consumer, I'd like to see that firm up, but I think it will, because the economy does seem to be pretty strong overall, and consumers doing well. I wish I could remember. I think it was the Ross. It was one of the discount retailers, Ross or Marshall, TJX, or somebody said, it's really amazing just how resilient the U.S. consumer is. And I might do a brief editorial. We're right at the end there. The only other, it's just a brief segue editorial comment. I've been watching a lot of World Cup. I'm supposed to be going tomorrow night, but it's going to pour. And this is a stock market commentary in that, people are out spending money, having a good time. I'm seeing all these Scots that took over Boston, and they're literally saying, it's like, we're coming, we're bringing money, and we're putting it in your economy. They are, and people are having fun and spending money. I think this is a pretty big contribution to GDP. I don't know how many people are here, but it seems like there's a lot of activity going on associated with the World Cup in whatever it is, 11 major cities across the country. That's great, and it's fantastic. It's really uplifting and heartwarming to watch. So I'm going to stop here. As always, I'll happy to take any questions. I don't have YouTube up on my screen, so I don't think we've had a single question there anyway. But if anyone wants to drop anything in the chat, I'm happy to do it. You can always drop questions because I imagine people will be listening to this later. You can drop questions in the chat or on YouTube, and I'll eyeball it in the next day or so and hopefully get back to you. But again, no questions. I'll just wrap it up. Thanks very much, and good luck.